Hello, everyone. Good morning, good afternoon, good night, wherever you are in the world. Thanks for tuning in. Really appreciate you giving us some time. And we are very, very fortunate today to have Kaenan Hertz with us. He's a superstar and a rainmaker in a bunch of the insurance industry. So I'm really looking forward to the conversation. Really looking forward to getting some of your thoughts, Kaenan. And I guess to kind of frame up the conversation, the thinking today is how can we talk about the building tomorrow's insurers? So I think there's a lot of pieces to that. I think there's a lot of opinions. I think there's a bunch of stuff that's happening and maybe some stuff that isn't happening. But maybe I'll just pause there. Kaenan, I'll maybe give you a chance to maybe introduce yourself and a little bit about kind of how you think about the world. I'll do the same, and then maybe we'll roll into the conversation.
My name is Kaenan Hertz. Thank you so much for having me. I'm the managing partner of InsurTech Advisors, where we work with, here in the US, primarily regional insurance carriers, helping them innovate and helping them really leverage the advances that come out of the InsurTech space. In that journey in InsurTech, I met a group of founders who convinced me to come and co-found a boat insurance company called Ahoy Insurance. So I sort of have the experience on both sides of the fence, not to mention prior to this working at USAA and then in Big Four consulting at PwC and EY. So for me, I think what's really interesting is you see the transition of carriers themselves and the whole new world of InsurTech and how that has really forced incumbents to really evaluate the value that they're bringing to their insureds, the value they bring to their colleagues, and the value that they bring to essentially their distributors, whether it's agents or other partnerships. And I think what's exciting for me is really some of the amazing things that are happening with companies like yourself and others, right? In order not just to replace an insurance company, which personally I think is nearly impossible. Like, some of these carriers have balance sheets larger than any, third world countries in some cases. And, they're not going away. So the real question is, how can we coexist together and drive the industry forward?
Yeah, super interesting. Nice segue. I think that's kind of the theme, isn't it? Really, the theme of kind of how can kind of insurers really turn these kind of strategic partnership advantages to really allow them to kind of amplify what they're great at, and then kind of fill the holes of maybe kind of what some of the insurtechs are doing a really good job at. And I think that's that kind of theme of how that partnership can evolve. I think if you look at historically within the financial services space, and you look at payments, and you look at lending, you look at the banks, I think it's kind of really maybe shown a bit of a blueprint of how I guess incumbents and new entrants can work together. And so kind of when like that as the kind of context, when you're thinking about that change, that evolvement, how do you think the incumbents need to think about that, and how do you think that the insurtechs are going to kind of help them change, help them kind of get redefine what customers are looking for?
I think, like everything, right, the spectrum is broad and wide, right? You have incumbents so if everything is working well and you're growing and you're doing fine and your combined ratio is reasonable and you're making money, right? Ultimately, there's little incentive to innovate, or there's little incentive to change unless something major from the outside world happens, right? That forces that upon you, whether it's a regulator, whether it's just a massive shift in the underlying risk categories, whether it's global warming or some type of a war that we see, unfortunately all too often. But for the most part, I don't think there are that many carriers that are, going through life, everything's rosy the whole time. And so the question becomes, do you have leadership who understands that the world is shifting and that they understand that they need to change? And to change, there's sort of probably multiple ways, but there's two primary ways, right? You can go outside and bring that in, whether that means hiring outside talent or people with other experiences and bringing them in, or just hiring a consultant or a partner or something, or you just do it all from inside, right? And both of those sort of models can work depending upon what your organization is, what your culture is. Both have challenges, right? Because for the most part, people are afraid of what they don't know, or people are just used to working in their job in their little box, and great, and they're fearful of change. So to me, leaders, right, are the ones who can articulate, that art of the possible, the art of the future. How it's not about replacing, but it's about enabling us to do what we do best, right? I've long learned in my career that whatever is unique to you or to your organization, that's what you want to keep, right? So whatever that DNA is, safeguard that and nurture it. But anything else, like, why do it? And I think the simplest example, and just came to my head, is it used to be that when carriers would print out bills or policy docs or whatever, they had an internal printing function, right? They would do it all in-house, and they would stuff the envelopes and put the postage on it and mail it out. Well, that's not core insurance. And over time, the smarter carriers started to leverage companies that specialized in printing and mailing, because that's all they did. So they learned how to have the efficiencies, they learned the scale, they learned the unique tricks of the trade, right? And so knowing what's worthwhile leveraging and what's worthwhile keeping and safeguarding, I think is that secret sauce, and what will ultimately separate winners from people who struggle more.
I think it's interesting, isn't it? Just kind of to continue down that path. And you spoke about a little bit earlier about kind of incumbents innovating or kind of bringing it outside or developing within. And I think often incumbents do get a pretty hard time saying that they don't do much. But I think, and actually, if you look historically, these businesses often have been around for a really long time. And it's really hard for a business to be around for a really long time. And generally, you have to be adaptable. You have to be open to change. You have to kind of understand that you understand your core, but also understand that you need to kind of evolve as a company over time. And so I do think that DNA is in there. I think it's proved historically, and I think obviously we're now in maybe a faster changing environment in which they're having to more rapidly evolve, and that's kind of maybe why partnerships help. But I do think the DNA is in there within the incumbents in terms of partnership and evolving and moving into what's new.
Look, your point about some of these carriers have been around for 200-300 years. Ben Franklin here in the U.S. started the oldest insurance company. It's called the Philadelphia Contribution Ship, 1752, if I remember correctly.
Yeah.
Right.
Yeah.
That company has evolved in the few hundred years they've been around. Right. So there's no doubt that carriers change and carriers evolve. If you're State Farm, you've taken the best of prevention, the best of telematics, and you've tried to do it yourself, or you've leveraged some startups who produce telematics solutions, whether it's on a mobile device or with a physical device. Right. The real question is, with legacy systems, with legacy approaches, with legacy distribution models, right? How do you balance all of that? Right? And I think that's the trick. So some carriers are wedded to what they do because they're afraid, or right now, 100% of my business comes from independent agents. Right? Well, I don't want to scare them. I don't want to lose that business. Well, you know what? You're not necessarily going to lose that. And I think to some extent that was how Lemonade was successful, right? Yeah. They chose renters insurance, which the majority of the carriers, it was a byproduct of having a relationship with a parent who then had a child going away and wanting to make sure that their apartment was insured. But agents didn't want to sell it because a $100 policy, what they make $10, it takes, costs them more than they make. So, if you as a startup and you want to be a product startup can find a niche that the incumbents aren't interested in, or underdeveloped or underserved, then you can really gain quick market penetration, right? The trick becomes now translating that into something bigger, into something more profitable. And we've seen that the public insurtechs have certainly struggled with that.
Yeah, they've struggled in the near term, haven't they, for sure. And I think maybe that kind of, it always kind of leads down that path of like convenience and technology versus kind of maybe kind of like trust and legacy. And those two things kind of sit seemingly on other ends of the spectrum in terms of carriers have, like traditional carriers have one and insurtechs have the other. And obviously that delightful experience has been created by the folks like Lemonade and Metromile and all those kind of folks that have gone to the public markets, driving that kind of user experience as the primary driver. And if you look at kind of what they've done, what they've been successful at, kind of when you're speaking to carriers or when you're speaking to kind of leaders in the industry, is there anything that you kind of you take from them and you kind of want to kind of share in terms of looking at their success and some of their failures, and what kind of advice you give, or what kind of how do you share information with the carriers and the companies that you speak with?
Look, I think there's sort of two pieces at play there, right? There's product, like real legitimate product innovation, right? So in the homeowner space, I think the best example of that has been Hippo and how they've thought about prevention, right, with the home maintenance and home surveying and having the ability to have a consultant through your phone look at something that might be broken and give you advice, and then find a person for that. Put aside even the IoT devices and the water leak sensors, and that's a whole other thing. But I think they themselves have, I think, rethought what home insurance is, and they're reframing it. Right, they're reframing it as protection, right? So we want to be there for your entire home, right? Whether it's a home maintenance warranty, whether it's the actual maintenance on it. If God forbid you have a claim, then we have a list of validated repair people that can come in that will stand behind, right? I think that's actually very forward thinking. Just to create a slick chat bot to sell insurance, that all that does is essentially put lipstick on the hippo, right? It's not changing the underlying product or the underlying asset or the underlying message. So what I share with the incumbent carriers is really understanding your marketplace, your customers, your agents, your businesses, all of that, your local, like your locale, right? What is it that's changing? What can you now look to in the outside world and say, hey, that's actually a pretty unique idea, right? So with one of the carriers that I'm working with, they are looking at the use of external data to try to predict, does this homeowner or farm have a certain item, on their property? A different example that I've seen is using aerial imagery and suddenly noticing, hey, there's a pool. They never told us they had a pool, right? Or determining true footprint and true square footage. Or if you are in a very prone area with wildfires, using, let's say, aerial imagery to identify which houses have a lot of brush close to them, and then proactively sending out companies to clear that brush as a preventative measure with no charge to the policyholder, because if you can save that house from burning down, you can probably clear away brush from 100 homes, right?
Yeah, I chatted to a carrier just last week actually, and a similar kind of vein. They were talking about an imagery company they're doing a bunch of work with, a data layer, and interestingly, I hadn't kind of thought about this, but obviously when a claim happens or when a catastrophic event happens, the carrier has to hold on the balance sheet a bunch of capital for the potential claims loss. But then using this data layer and this imagery to be able to very quickly understand what the actual loss is going to be within a much better accuracy, and therefore actually they don't have to hold all that cash on the balance sheet that they're currently holding up and not being able to use for anything else. And so it's actually like yeah, not a cash flow thing specifically, but in terms of them being able to kind of put cash across the business and not having to hold so much capital up for claims deployment, I think was just a really interesting nuance that I hadn't really considered before, from the advantage of some of the imagery, obviously, as well as it happening, the actual claim itself, as well as happening to help price the risk, but actually on the back end in terms of like from a capital allocation perspective. So it's super interesting.
So that, that brings up, I think, an interesting thing. So when you read all of the news articles around InsurTech and you see all the buzz, right, it's one of two things. It's either, a challenger to an incumbent, right, or it's an interesting, technology company that is selling a service. Let's say imagery is a simple one.
Yeah.
But there is a very small sliver of companies that are really working on the backside, on reinsurance, on capital allocation. And I think that's actually, in some ways, far more impactful to a carrier, because if you can cut your reinsurance costs down by 1 percentage point, that's literally 1 percentage point on your combined ratio. Similarly, if you can reserve infinitely more accurately, right, that could be 2 or 3 points, right, in your combined ratio. And so while they're not getting as much buzz, I think there is some activity, a growing amount of activity that's really around that, call it the asset management and asset side of the business, which for all intents and purposes is the mirror image of the carrier, right? Because you have to have assets to pay the claims, and right.
Yeah, interesting. I think that all that comes together, right? Is that and talk about that kind of lipstick on the hippo, like depth feels more and more important in terms of like that vertical integration, in terms of like really deep across the insurance stack, in terms of where these kind of partnerships can emerge. I think it's very easy to look at the distribution layer because it's simple, supposedly simple, but actually kind of lots of the value comes in lots of different parts of the stack. Like, and if you think about that in terms of maybe kind of potential strategic partnerships or kind of acquisitions, or like kind of, have you kind of seen any, I guess, kind of in your roles, any kind of templates for success, I suppose, in terms of maybe young companies that are trying to partner with incumbents and how to do that really effectively in terms of positioning, and like vice versa, like an incumbent, like and analyzing and assessing kind of what the potential impact on the business a partnership with a young startup could be.
So I think there's one key. There's sort of two keys for success for that enabling InsurTech, right? You need to have a level of humility, right? So you might have the best solution. That will come through with your humility. But you have to understand that the carrier's been doing this for 100 years, 50 years, 200 years. They're not stupid. They're not silly, right? So you have to have a little bit of that. But more importantly, you have to put yourself in their shoes and be able to articulate what's the real value of doing this. Because whether you are the InsurTech building your product or you're the incumbent carrier, at the end of the day, your demands on your resources are infinitely greater than your resource pool, right? And so what you need to do is you need to convince that carrier that investing the time, the energy, the money into your solution will reap X times more reward for them, and therefore it's worthwhile prioritizing. And understanding and being able to talk the talk. And the best example I can give is, if you are a cocky New Yorker and you're going into the middle of rural America, right? You better be able to talk the way they talk and think the way they think, because you can't expect it to be rushed and like this, and you could be aggressive. It's just that cultural fit isn't going to exist. And the same point I make for the carriers, which is, as you're looking for partners, the most important piece is the cultural fit, because for the most part, the product, company A's product versus company B's product versus company C's product, everybody has one stronger muscle, but for the most part, they can do the majority of everything the same way, because Otherwise, you wouldn't have been on the table, right? So you've got the table stakes there. And so to me, where it makes a critical element of success is that both the carrier and the InsurTech are on that same cultural wavelength, right? Whatever that might be.
It's interesting, isn't it? Because I think that cultural piece, I think in the US specifically, like there's a vast difference state to state. And I think kind of when you look at a bunch of the insurtechs that have tried to do a good job there or try to kind of scale nationally there, it's actually been a real challenge often. And there's been had focus areas on different states. And I think you can abstract that and look at that globally and say, like the same challenges. You got this microcosm, or not really a microcosm, but a microcosm within one country of like vast differences from Texas to New York, for example. And then you've got like Singapore compared to the UK or compared to Finland. Do you know what I mean? There's that culture nuance you're just talking about. I think you get in both in America and globally, and it's an interesting challenge, isn't it, for companies who want to be like global businesses? How you kind of approach that.
And that's a great point. But even in your case, in Australia, right? The little I know, right? Sydney, Melbourne, Brisbane, right? Let's say larger areas are very unique in their culture, their way, their approaches, right? And so even in a much smaller country, you still have a lot of this regionality. But I think the success comes from making sure that you hire local, right, and deliver global. Right? I think that's the key. Even building the InsurTech, right? You can build it globally, but you need to deliver it locally, right? And that could come across if you are a core system in Japan or China to be native characters, right? In the programming side of it, in the back end, right? Or it could just be making sure that the people that you hire and the advisors that you get have intimate local knowledge.
Yeah, interesting. Yeah, that nuance is important, especially on the like that partnership side. I think kind of obviously when you look at the cross section of a company being like kind of product and engineering folks and those kind of things, but that kind of customer facing layer in terms of partnership, sales, GM hiring, that kind of thing, that local knowledge is very, very important. If you were to like start thinking about kind of next year and start thinking about kind of maybe things that you're seeing coming down the pipe, we're getting towards the end of the year, and kind of it's all time. I guess it's a time that everyone reflects a bunch and then starts thinking of kind of how the world's moving and kind of how things are evolving. And I think we generally think that it takes much longer to get things done, excuse me, than it does in terms of that 1 year, 10-year kind of adage. And so what do you think about next year? What's on your horizon? What are you seeing? What are you excited by? What do you kind of think's maybe all hype that maybe kind of fizzle away? Kind of really interested in some of your broader thoughts about the year.
So I'm going to take a little bit of license and
as much as you want,
and add an example, right? So
got it.
During COVID, there was an example out of China that to me speaks wonders to a desire to do something. Mm-hmm. And if you have that desire, then it doesn't matter regulatory hurdles, it doesn't matter costs, it doesn't matter all that. You'll figure it all out. And certainly in Asia and parts of the world, there's a communications platform called WeChat, right?
Yep.
And that's much more dominant. In Europe, it's WhatsApp, and in the US, it's really just SMS, or a combination of those two, depending upon where your friends are. So at the end of December, 2 years ago, unfortunately, the world learned about COVID. But WeSure, which is the insurance arm of WeChat, within 1 month, launched a product geared to healthcare workers. Mm-hmm. 2 days later, they launched another product geared to small business owners. About 4 or 5 days after that, they launched a business interruption product. And a couple of days after that, they launched a product for the general public to any WeChat user, offering them a small amount of coverage. Those four insurance products, they partnered with AXA, they partnered with the People's Insurance Corporation of China. So think about that. 4 products in essentially 6 weeks, right? And by no means is China open from a regulatory perspective, right? So if you think that your regulations and your regulator is that much more complicated, they're not. And so to me, when you ask me, what do I see in the year? I think the only thing holding back anyone, whether you're a carrier or a challenger or an insurtech, is yourself.
Yep.
It's your own mindset. It's the fact that you can't see in front of you. My wife just today reminded me of a quote she heard from the race car driver Danica. I forget her last name. I think it might be Andretti. But her father, who was also a race car driver and her coach, said to her, you head to where your eyes are going, right? Never look back, right? If you're going around a racetrack at 300 miles and you turn back, you're done, right? So you have to follow your eyes. You have to follow the future, right? And so I think that's the point, is follow your eyes to the future, don't look back, and you'll accomplish everything. So now, to answer your question, what is that everything? Right? So I think there's a thread. There's a thread right now within payments. You had mentioned, right? Where the evolution of the fintechs within payments has been one where they've now gone very vertical, vertically integrated. And so I actually see that probably being a likely outcome and a likely path that the insurtechs will follow and the insurance carriers, right? Is this much deeper vertical integration. Horizontal, you're spreading peanut butter, as thin as you can on a slice of bread, right? Or Marmite for you guys, right? There's only, so much of that goes, so far. Pardon me. But if you go deep, right, you can touch every aspect. I think that glue becomes so much stronger and so much more powerful. So I see that occurring over the next year, probably more and more. We can't go into thinking about next year from an insurtech perspective without talking about the changing in the funding world, right? VCs are still pouring billions, but they're far more pointed in how and what and when and how much, right? And so I expect there will be a lot of insurtechs who fizzle away. Some of them will be lucky enough to be able to be acquired by another insurtech. I am shocked at how little M&A is going on right now between carriers buying the intellectual capital of some of these insurtechs for pennies on the dollar. So I would expect a little bit more of that to probably happen. And then, you have the main issues right now facing insurance, right? And I think you will see continued involvement of startups and carriers, right? Cyber, making sure you can appropriately price that and appropriately understand that risk and appropriately prevent, some of that risk. Global warming, and what does that mean, right? I think that, to me, what's the most interesting, and I don't hear very much discussion about it, even within a carrier. I've heard and been involved in conversations with banks, much more in this sense, which is, where's the world going to be in 3 to 5 years, right? So what is insurable risk in 3 to 5 years, right? Either what aren't we insuring now that's going to crop up? So think of cyber a while back, right? But to me, that's the piece that if carriers, if incumbents were smart enough, they would start to say, what's the world going to be like in 5 years? Now let me make sure that I understand what are those mileposts that's going to get me there, and which mile markers are the ones where I notice the fork in the road, so I'll know if I'm mile marker 101, I went this way, and if I'm mile marker 110, I went this way, or 210, right? And I think that will end up truly separating the carriers that continue to grow and continue to see market share and market opportunities from the others, is the fact that they understand that the assets that they are insuring are changing. I use a great example. So I grew up in Western Canada, and we drank milk from a cow that we milked. Friends owned a cow, and that was the milk we had. Now, if you go to dairy farms now, there's a product called the Lily Astronaut, and it's not an Elon Musk.
The Lily Astronaut?
Yep, the Lily Astronaut.
Yeah. And
it costs about $200,000. But what is it? It is a self-milking machine. So the cows, who know when is the opportune time to be milked, walk over to that machine. It scrubs their udders. It puts on the suction. It takes out the milk. And what does that mean? It ultimately means the quality of the milk is higher, so farmers are getting more per pound. Mm-hmm. The cows are happier. It has an automatic feeding component also, right? But now your farm has a very different insurable base. There's less labor needed, so your workers' compensation stuff is lower. But the barn isn't a $75,000 barn now. It's a $275,000 barn. Or if business interruption, if that machine goes down for an hour because you lost power, right, the cow will absorb the milk and you can't get that back out, right? And so now your business interruption perhaps is a much higher risk. Or sticking to farming, there's, currently for weeding, it's a chemical weeding process. But there's a whole set of ag tech that's looking at electric weeding, right? So now, if you go into electric weeding, now there's less risk of contamination of the water supply and all this. So that end of the insurable risk changes. Right? So these are the kinds of things that I don't think we as an industry do a good enough job sort of looking outside, seeing what's coming and what's changing, and then reflecting that back into our own business.
Yeah, just to kind of wrap that, I think it speaks exactly to what you mentioned right at the top, which was how vertically deep is really important to be, right? Because if you kind of think about that in terms of risk selection and understanding the risk of pricing, that's right at the bottom, all the way through to kind of capital allocation, through to distribution, through to kind of customers. We spoke about a bunch of those different things today, and I think kind of all of those things point towards how important it is. And how, if anybody wants to be successful, if you want to, if the carriers, incumbents want to kind of continue to drive forward, and startups want to continue to, partner and be part of that journey versus trying to kind of take them on toe to toe. I think kind of the helping go deep, I think feels like a really thoughtful way to think about kind of approaching the problem and providing maximum value to the carriers. And I think I completely agree. If that's a thought to take away, which is kind of how can you add value to go deep and go deeper across the stack, I think there's lots of paths to success. So is that fair? Is that a good kind of summary on a bunch of the conversation?
That's brilliant, for sure.
Awesome. Look, Kaenan, I'm already taken over 30 minutes of your time, and so I really, really appreciate it today. It's I thought the conversation would be insightful, and no doubt it has been. I'm sure everyone listening has really enjoyed it as well. So thank you so much. Really appreciate your time. I'm sure if anyone wants to follow your content, you let us know where they can find that. And then if anyone wants to follow us up directly, we're happy to kind of pass the details on. So Kaenan, thanks for your time. Really appreciate it. And best of luck towards the end of the year, and have a great 2023.
Thank you very much. Same to you, Nigel, and to all of you at Kanopi.
Thanks so much.